Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over what the distribution rates that Kurv, YieldMax, and Roundhill are advertising for February 24th through the 28th. We're going to talk about what the market just did to us and the opportunities it has presented to us because of these beatings. And then we're going to talk about how much money I injected into my account. It's the first time in 9 months I have added money to this account. So let's get started. All right, guys, my one goal for this channel is to be as transparent of a YouTuber as possible. So here it is, right? The cash injection that I did inside of this account was about $10,000. And let me explain where the money went and why I did this. So the reason why I put $10,000 into my account is, one, I haven't put my own money into this account for the last 9 months. So I thought today would be a perfect opportunity to kind of buy good assets and then wait for the market to rebound. Then I continue growing the account in that manner, right? So I haven't invested in this account for 9 months because if you guys are familiar with my work, the way this project started was I took an $80,000 HELOC loan against a rental property I own, threw that money in a Robinhood, borrowed against it with margin, and then here I am today. I paid back about $34,000, almost. I think I'm coming close to like $37,000. I'll have to do an update this weekend. So I think I paid back about $37,000 already. The account is at, if I didn't put in this, $10,000 cash injection, the account would be about $81,000. So over 9 months, if I were actually reinvesting the money, this account would be a lot higher than it is today. But I was taking the money out and I was paying back the loan, because for me, the way I thought about this is, for me to save up $80,000 would take me X amount of years. And I thought it would be a better use of that time that I can never get back is to just front load it and just pay back a loan later down the line. Is that a crazy idea? Maybe. Would I recommend this? Depends on your risk tolerance, right? So what did I talk about? So, okay, that $10,000, I bought $5,000 of GPIX, right? So if we scroll down, let me get this cursor going. I bought about 100 shares of GPIX because because I made this money, I had to go to work for this money. I want to actually put it into an investment that's not really going to nav a road and that's going to pay me a distribution. GPIX, the distribution, I think, is somewhere between, 8 to 10% a year, right? Very safe. But the thing about GPIX is it's not really going to lose its value like most of these high income ETFs, right? So if we just take a look at the chart for how GPIX has performed, over the last day, it's pretty much broken even. And the after hours, it's up. So let's look at the last week. Yeah, it's only down 1% with this massive downward trend. And then let's look at the last month. Still trading pretty flat. And so let's go even further than that. Let's go to that last 3 months. Maybe the next year. Yeah. See, but the thing is this fund over a year time period is going to appreciate, not necessarily a great number, 8.48%, right? As we can see up here. But it's going to pay you a consistent distribution. It's not going to lose money, and it tracks the S&P 500. So that's why I put about $5,000. And the other $5,000, once it loads, is I bought a 13-month leap on SPY. Same concept. The option cost me about $4,443. And I'm anticipating that S&P 500 to go up to, I think that 600, 605 mark within the next couple days. I think it crest almost $600 today. And I think the option was at $4,800. So if I would have cashed out today, I would have been up $400. But I didn't do it. I want to be a little bit greedy. I'm thinking the S&P 500 will probably go back to I think this 605 range. I think this is the next touch point is this 605 range here. So that's what I did with my $10,000. Once I sell the option, right, I might take that $5,000 back out of the account because I just want to do a quick, surge in money so I can make a quick play. And the reason why I wanted to bring in cash from the outside world into this account was because for me to do that, it has to be a significantly deep red day, because I have margin where I can accomplish that exact same thing. But for me, I wanted to be very, what's the right word? Conviction that, okay, this is a great opportunity to buy. So I took some outside money, brought it in for a surge. And then once I make money off the surge, I might pull some of that money back. So I definitely want to keep that $5,000 in GPIX, but that money I ran for that option, for that SPY option, that SPY leap, I might pull that money out. The cash that I make off of it, I might throw it into JepQ or back into GPIX. but then I might pull that $5,000 just to have cash ready, because you never know when you need cash, right? But that is the one thing I recommend for investors, is to have, side money into just like cash into a bank account. You know why? Also, it definitely helps to have cash, especially if people are not saying that I'm doing it. I like to leave a little bit of a buffer when it comes to my margin. I think my borrowing power is about $63,000. I don't ever like to max out margin, especially for times like this. In my life of investing, I'm 31 years old. I have been bit by using a little bit too much margin before, right? So what does that mean? Now I always have cash on the side just in case I need to surge it. This case, I didn't need to bring in the money, but to make an extra buck, I decided to do it. So speaking of margin, yeah, having too much margin is always a bad thing. I'm definitely all about not maxing out margin. Definitely, I'm not saying don't use it, but don't use it, all of it, for events like this. Because the way it works is if you have too much margin, right, you're right on the cusp of anything going wrong, you're going to have to take a loss for it, right? If you're trying to like tax harvest, cool, that's going to work for you. But for most people, if you use too much margin, right, and there's a huge red day like today, you are basically guaranteeing an absolute loss on borrowed money. Doing a guaranteed loss on absolute money or borrowed money is never a good thing, right? So imagine, like, especially on top of this, add that you're on a single stock high income ETF like NVDY or like a msty. Msty got absolutely crushed. And if you were fully loaded on margin, hopefully you had enough cash on the side to like surge, throw it in your account, and then could have protected your investment. But imagine if you didn't have extra cash on the side and you had to sell at a loss. Some people out there I know probably had to undergo it. Not saying it's a bad thing. Everybody sometimes has to get bit by the stove, get burned by the stove. But the thing is, just take this as a learning point where don't overdo on margin, and then definitely spread your risk. There's a reason why my account, well, even in December, right, I was heavily invested in NVIDIA. I think I had about $150,000 in NVIDIA. And then NVIDIA took a massive dump in December. And then I realized at that point, like, don't get me wrong, premiums were premium. They were great. I was getting thousands of dollars every single month, and it was fantastic. But then once that red day hit and then you're down about $25,000, you're like, maybe I should try to spread out this risk. And that's why I invested $60,000 in the xdte, $60,000 in the rdte, $25,000 or $27,000 now in GPIX, $22,000 in JPQ, like in more stable funds that aren't going to narrow. And if there's like a market correction like we're having today or this past couple of days, I'm going to be able to withstand it with my account intact. I'm not going to be having to sell my funds at a loss. Right now, over the last 3 days, I did not have to sell anything at a loss. So that's when you're at a pretty good point of that balance between margin and ETFs that don't have a lot of margin maintenance and just better funds, right? So if you were bit by it, don't necessarily be afraid of it. Don't completely sell out. Don't take this as a loss, because the thing about investors, as long as you're persistent and you keep going, you're going to eventually make money, but you just need to be smart. Sometimes you do have to be bit by it. Cool. Now that we kind of got off of that soapbox, right? So I guess what I'm preaching on this channel is, balance the risk of high income ETFs. Don't get me wrong, get the high income ETFs, get ones that are volatile, then also balance it with ones that aren't as volatile, that don't have as high of a distribution, but they don't narrow. So things like that. Cool. So now that we talked about that, let's actually talk about the distributions for February 24th to the 28th. All right, guys, before we go over to the distributions, let's talk about the channel. You guys have helped grow this channel to 1,762 subscribers. I am absolutely so thankful for all of you guys that have taken the risk of watching my work. I appreciate it. I love reading all of your guys' comments, the good, the bad, the ugly. And if you are new to the channel and haven't subscribed yet, it is absolutely free to press that subscribe button and the like and leave a comment. But it means the world to me, and I appreciate you guys. Thank you. Now let's go to the distributions. All right, guys, let's kick off the distribution overview for February 24th through the 28th, starting with YieldMax. We're going to go over the weekly payers, and we're going to head right into the monthly payers. So for qdte, we have a distribution of about 32 cents a share, sdty about 19 cents, gpty about 31 cents, lfgy about 53 cents. YMax, I own about 1,200 shares of this, was at 13 cents. YMag is at 17 cents, which was crazy that it finally beat YMax. in one of the weekly distributions. I want to see more of that. Cool. Now going over to NVDY, I own about 1,500 shares of NVDY, and the distribution is 1.6. That is phenomenal. That's pretty much like the last two premiums combined. It hasn't paid this high of a premium in like 3 months. So I'm pretty excited about this. That's another reason why my Robinhood account was down about $2,400 in the after hours, because we do my 1,500 shares multiplied by this 1.6, that's about $2,400. So if we go back to my Robinhood and add, you know, 2,400, my account is going to be somewhere around that $95,000 mark. But like, again, if I didn't do that $10,000 injection, that'd be about $85,000. Cool. We talked about NVDY. So now let's talk about dips. Dips was 58 cents. FBY was about 47 cents. GDXY, 44 cents. Babo, about $1.91. That's pretty good. I still wouldn't invest in Babo, plus they're a Chinese company. We don't trust them. No, I'm just kidding. For JPMO, that's about 29 cents. MRNY, 23 cents. plty, $5.93. That is freaking crazy. Almost wish I would have jumped on that momentum, but I would prefer the safer bets instead of Palantir. So, all right, Maro was at $1.55. Cool. So that goes over all of the YieldMax stuff. Let's go over to Kurv. I almost like going over Kurv a lot because they have like 2 funds and they're just good. All right, so NFLP had about an 85-cent distribution this week. And then for KQQQ, it's about a 15-cent distribution. It's not too bad. So let's go over to Roundhill. All right, guys, looking at Roundhill for xdte, we have a premium of 20 cents this week. For qdte, it's about 25 cents. For rdte, about 20 cents. Man, xdte outperformed Roundhill. Wow. For the crypto covered call ETFs, we have YBTC at 22 cents. And then for Roundhill Ether cover call strategy, ETH, that's at that 1.89. Cool. So guys, that wraps up all the different premiums for the different premium lands. So let's do closing thoughts. I just want to call out what the $2,400 drop looks like. So from here in the after hours, NVIDIA had that X dividend payment. That's why the account went down. We go to my NVIDIA shares. There's going to be a spike down because of that X dividend. YieldMax is pulling out that distribution from the share price. Cool. All right, guys, here are my final thoughts. We talked about my cash infusion, right? The pros and cons of doing it, why I did it. All right, we talked about the margin considerations. This market has probably beat down a lot of people, which is going to make them think about maybe don't overdo it on margin, maybe don't overinvest in one specific fund, right? For people that were invested in msty, when the going is good, I mean, they're getting those fat premiums and their share price was appreciating. Life was good, but then the second there's a weak period where it was, the course has changed. A lot of people were bit by it. Hopefully, I pray that you guys were not margin called, but if you were, we take this as a lesson moving forward to maybe diversify. Maybe don't put all of our money in one single ETF like msty, or just in general. Yeah, you heard my story. I was overinvested in NVIDIA. So then in December, I kind of redistributed my holdings into like 3 different tiers, right? High distributions, high NAV erosion, tier 1. Tier 2 is less NAV erosion, decent distribution. And then my tier 3 is like my GPIX, JEPQ. NAV appreciation and distribution is not as high, but at least you won't lose your money. That's kind of my thoughts on that. So yeah, hope you guys enjoyed the video. Enjoy your journey out there. Have fun. I'll see you next time. I'm thinking about making more videos, but life does get busy sometimes. I might try to make a overview of what the market looked like, maybe top 3 winners, top 3 losers in the high income ETF field. If you guys are interested in seeing that, let me know. Let me know what you think in the comment section. All right, I'm out.